I'd like to move on to the equities market. When we spoke about 6 weeks ago, the Dow Jones Industrials appeared as though it was falling off a cliff. The wheels fell off the cart there for a while. We dropped to about 6,400. That was over a 50% haircut from the peak. But I agree with your recent announcement that we may not have yet seen the ultimate bottom in the U.S. stock market.
Well, I'm convinced we haven't, because I'm convinced that the American economy and the world economy is going to continue to have problems for some time to come. There are going to be more bankruptcies, more losses, etc. It does not mean that markets can't have big rallies. They always have. In 1930, for instance, the stock market went up 50%, even though it was on its way to one of the biggest drops in the history of the world. Still had a 50% rally. So that is my view of what's happening in the stock market now. I haven't been buying any stocks in the past few months anywhere in the world because I just don't see this as being a real thing. So I'm sitting and watching stocks anyway to see how this all unfolds.
Keeping with the stock theme here, a recent Barron's interview, you said that you'd sold most of your emerging market shares except for China. So you're basically sitting on your hands right now, waiting for the market to come to you?
Yes, the only stocks I bought in the last couple of years, I covered many of my shorts in the U.S. in October and November, and I bought some more Chinese shares, but I have bought no shares in a couple of years anywhere in the world. I've sold all my emerging markets except China. The only way that I see to play the world right now is to buy real assets, commodities, because if the world is going to get better, they're going to be the leaders. And if the world doesn't get better, you're still better off in commodities or real assets because the governments around the world are printing huge amounts of money. And that has always, throughout history, led to higher prices down the road.
Very good. In the same Barron's interview, you mentioned some purchases of commodities through the Rogers Commodities Indexes, and that's the Elements Rogers International Commodities Index, ticker RJI, as well as 3 specialty indexes, International Metals RJZ, International Energy RJN, and the International RJA. And then you'd said that you'd been accumulating, if you will, since fall of last year.
I bought more a week or so ago, the RJA, the agricultural. I bought more of all of them a week or so ago, agricultural, mining, metals, and energy, and the big index. So I bought all 4 of them recently. Even if the world's coming to an end, you're better off in commodities. We had horrible economies in the 70s, and commodities did extremely well because there were shortages. We had terrible economy in the 30s, but commodities did better than stocks because there were shortages. And commodities are driven by supply and demand. The supply of everything is under duress, as we discussed earlier. Oil reserves are declining, metals reserves are declining, everything is declining. So that's the place to be, whether the world gets better or doesn't get better.
Well said. 2008 was a tough year for we commodities bulls, but it was even more brutal for the financial sector. Now, you clearly did very well with your Fannie Mae and Citigroup short sales. What do you view as the next overpriced sector with a high probability of failure?
The United States government bond market, the long-term bond, I'm not shorting it now. I shorted it once and covered quickly because that's the last bubble I see, that in the U.S. dollar. But that does not mean you should short it now. I've shorted many bubbles in my life, and I've learned the hard way. You better wait because bubbles can always go higher than anybody could expect. So, in Japan, long-term government bonds went to so high that they yielded 0.5%. With this man running our Federal Reserve, our central bank, we could have the same kind of insanity. So I'm not shorting bonds yet, but I plan to. And I'm not shorting the U.S. dollar yet, but I plan to.
Keeping with that train of thought, certainly you must be thinking of higher interest rates. Interest rates are inversely related to bond prices. So as those rates go up, bonds usually become less attractive. Do you see double-digit interest rates in America's future in the next few years?
Oh, absolutely. We had double-digit interest rates the last time, and inflation is going to be much worse this time. If you ask me, in the 70s, America was still a creditor nation. We are now the largest debtor nation in the history of the world. So all this money that is being spent has got to come from somewhere, and you either print it or tax it or borrow it. And either way, it's going to cause much, much, much higher interest rates. So no, that's one reason I anticipate shorting bonds somewhere down the road.
With home prices in the North Carolina mountains falling quickly, have you and Paige considered a vacation home in the Blue Ridge Mountains?
Well, we've considered lots of things, and we certainly love North Carolina, many places in the U.S. But no, I don't want my assets in the U.S. I'm afraid they're going to be exchange controls, in the foreseeable future, and it's going to be pretty savage for anybody who's got his assets in the U.S. It's happened before in history, not just in the U.S., the U.K. You pick the country. When things go bad, the politicians always take it out on the citizens. And I just as soon not have my assets where they can confiscate them. As you know, they confiscated gold in the 30s. I doubt if they would confiscate gold again. But they may confiscate our pension plans. They may confiscate our real estate. Who knows? In Germany, they once confiscated the real estate. I'm just a little leery of the developments that I see happening. I don't like saying this, obviously. We're American citizens. We pay American taxes. But I have to deal with reality, not with what I would like to be.
You mentioned the British Empire. Your home there, that was one of the most crucial commercial and military centers of the empire, thanks to the East India Company and the spice routes. It sounds like a very culturally diverse and interesting area with that type of history.
Well, to me it is. It's multicultural, multiracial, multilinguistic, all sorts of different races and people here. It's predominantly the Chinese ethnic group, but from China several generations ago, not now. It's very, very exciting and interesting crossroads as far as I'm concerned. But remember that the assets that the world has now are all in Asia. The creditor nations, the largest creditor nations in the world are China, Japan, Korea, Taiwan, Hong Kong, Singapore, India. I mean, this is where the assets are. And throughout history, civilization has sort of moved towards the assets. You do not see any time in history when the civilization has moved towards the debtors, towards the people who have serious economic problems. They've always moved to the people with the assets. So in my view, Asia is going to continue to be an exciting place to be.
Look at the CIA's list there, and the United States is the largest debtor nation, while China is the largest creditor.
The U.S. government, to its credit, and they usually lie about most things, is aware that the situation is bad and getting worse, and that it could lead to serious problems for the U.S. I mean, I'm not the only one who knows what's going on. Unfortunately,